gold at 4,000 an ounce, I was like, holy shit, this is actually happening. And it feels like I've missed the bull run already. I know I talked about it a little bit with Jay, so and
Yeah.
Jay said to both of us that we don't wish we were here a couple of years ago, but we're also still early. I mean, had a talk with another investor today, and he said he doesn't think anything is really going to start going up, and juniors aren't going to be following the gold price until 5,000. Everyone has an opinion,
Crazy.
but that was his.
Yeah, isn't that
So
crazy to think about? Like we're at 4,000 now. It's funny though, because I'm thinking back. Like I mean, everyone's known about gold forever. Like everybody's mom has some like gold earrings or something from 1990. Like everyone knows what gold is. But I've been investing for some time now, not watching gold, but even just watching gold, like the GLD like gold ETF. That's what like everybody trades in the States. I don't know who makes it, SPDR, I think. And I was like debating buying it at like 245 or something like earlier this year. And I don't know what it's at now. Like I'm pretty sure it's like pretty much mirrors gold just divided by 10. I'm pretty sure it's almost at 400
mhm,
bucks or something now. And I was like, it's had a good run. I don't know if I should get into it. And I ended up buying like PHYS with Sprott. So
mhm.
I'm like, I'm covered anyways, but it's just like I could have got in a lot sooner in gold. I only bought gold like a few months back and I'm like doing great on it already. And yeah, like you said, it's interesting to hear some price targets like 5,000 gold. Doesn't like it seems insane, but it also doesn't seem that crazy when you think about who's in the space. I mean, lots of people are buying gold, but it's like central banks are buying gold, governments are buying gold, and like all us gold bugs love it, right? But just seeing, and you know what, even today, like what Jay said, and you might have more to say on this, um, is that like a lot of the banks now are including like gold as a mandate in a part of their portfolio, like a 60-20-20 with 20% being gold. It's like, think about that. Think about when all the big banks are buying gold or like looking at gold miners, like really like you can argue it is really early. Like we could see some seriously crazy gold prices even by end of year. What did you say? I know I'm rambling on, but what did you say a couple podcasts ago? I know we've been kind of MIA for whoever's listening to this. Hopefully, our few viewers are still around because we've been gone. But you were like, oh, maybe gold 4,000 by the end of the year, and it's been like 3 weeks, and gold's at
It's
like
well,
over.
it's been a weird time to predict too, right? I mean, last time we made our price predictions, the government shutdown wasn't in play. Gaza and Israel weren't trying to come to a truce or a treaty, even though it's been a difficult time. Ukraine and Russia didn't, they've ramped up since our last price predictions, which all play into the price of gold.
Yeah.
So a lot can change in the even geopolitical landscape within
Mhm.
what I think that was 3 weeks it's been. So I
Yeah.
mean, everyone has, even the guy I was talking about today who said 5,000, everyone has price targets, but there needs to be true catalysts that are going to move the price action in that direction. I mean, even we've seen with KLDC, there's so much hype with it. Well, everyone's waiting for the next big catalyst to jump it up to what, 45 cents? Because I think the highest it's ever gone is 38 since we've been in. Is that correct? 38,
40,
39?
40, it peaked at 43 since we've been in it. Historically,
Okay.
it's been higher, obviously, but recently 43
Mhm.
is the high. Now it's at 35 at close today. But that's a good point for sure with gold. It's like, what's the next catalyst? But I feel like maybe with gold, you can argue there's like a steady catalyst too with the banks, getting their mandates now to invest in gold. I don't know what that looks like for them. Are they going to start buying, major gold producers? Are they going to just buy uh, GLD? I don't know. Maybe they're going to buy physical gold. I kind of wonder, what do you think? Do you have any predictions what that mandate kind of looks like for these big banks?
I mean, from the little bit that Jay's talked about, he said exactly what you said, that there's going to be roughly a 20% mandate. It's going
Hmm.
to mean a lot of new money's obviously coming in that hasn't been in the space for the last 7 years. Obviously, we're new to the space. So you could call
Hmm.
us new money as well. But
We're just early new
no,
money. We're slightly early new money.
slightly early new money,
Yeah,
but
yeah.
it's weird in that regard to, yeah, steady callus. Even when you look at silver, I mean, a steady callus could be the supply and demand deficit. Like demand heavily outweighs supply, and there's not enough currently producing silver mines to meet demand, and that is a continuous callus. But people still don't recognize it, and gold's almost breaking all-time highs. I think
Yeah.
again, peaked at $49 and 50 something
Silver
cents
price.
today. Went down a little bit, but it's all these commodities and metals are having these consistent catalysts that are driving the price up, and then they just need that one big one. Silver soon, hopefully, to break past 50.
Oh,
That'd be cool to witness.
yeah, silver is going to be at all-time highs by the end of the week. I'm calling it right now. There's no way.
Mhm.
At least by end of next week. It's what, October 8th today. I bet by mid-October it'll be at all-time highs. Yeah, silver's an
Got
interesting
a
one.
great chart.
Yeah, it does. It's been really easy to chart. Like I posted on LinkedIn and Twitter a couple of times, like charting out silver over the last few years, and it was like executed perfectly. It broke out of the channel. Now it's finding a new channel, like just textbook, easy to chart, easy to read. It's been fun to watch. Been talking about it for months online, but definitely think it's going to hit all-time highs in the next 2 weeks or so. And I mean, beyond that, it's kind of hard to. People have an interesting way, I think, of predicting. They look at like a historical move from like 5 years, not historical, a move from 5 years ago, and they like measure it up to 1,000% or whatever. Like this is a bad example of silver, and then they say like that's what's going to happen again. And I don't know why they come up with um, that method and feel like it works. I'm sure everybody has their reasons, but for silver, it's like uncharted waters, right? We're going to hit all-time highs, I think, in the next couple of weeks. And then what do you do? Like you said, the supply demand case is so strong with it. There's such a demand for silver. We need it. People want it. And every day I'm going on Twitter and like someone with 50,000 followers is like, hey, I called up all the Costco's in Ontario and they don't have any silver and they're not getting it for a year because they can't. Or some other
Yeah.
dude's in Singapore and he's like, hey, I went to this super well-known local bullion dealer in Singapore. Can't get any gold, any silver. They don't have any. Another guy in Australia, same thing, well-known bullion dealer in like Sydney or Melbourne or wherever they are, like a big city. It's like, no, we don't have any. We can't get any. We can't buy it. Nobody has it.
Well,
It's really interesting.
and I think that's one thing people don't realize who either aren't in the space or just starting to come into space is demand is rising with central banks. When you look at gold for silver, I mean, with the EV, solar panels, I think it's 20% of all the silver produced is going to go towards solar panels. I'm
Well,
not 100% sure on that statistic, but still, the point being that we need so much more supply. And Keith
yeah,
Neumeyer, I was watching a podcast with him today. I came out 2 days ago, and he even said that $50 silver is the mental barrier, and that once it breaks
yeah,
past that, he doesn't even know where it's going. He also hopes that it
yeah,
doesn't just go straight up because that's not going to be a strong price action. He hopes it kind of goes up, down, build that support and resistance level. But again,
yeah.
what's going to happen after 50? Where is it going to go? It's still at a major discount to gold. I mean, because
Yeah,
gold there
the ratio is
is not.
closing. That's the thing that's so interesting, though. It's like the ratio is closing because obviously silver is a lot more volatile, and silver goes up $2 and gold goes up 100 while you're still closing that gap. Um, but it is interesting to see both go up. It's just such an interesting time, man. Gold is breaking all-time highs almost every day. Silver is approaching all-time highs, and the stock market keeps going up. It's it's a really weird mix, and I'll be honest, I can't reference history well enough to say like what happened last time, but it's kind of unique because you look at silver's chart since 2011, like we're just approaching that 2011 high right now.
Mhm.
You look at gold and gold's been a good time for a lot of years. Like I look back 15 years, it's averaging like 17 and change percent every year. It's like you should have just bought gold every year for 15 years and stopped buying SPY and you would have been better off. But it's interesting to see both of those push all-time highs. One of them is there, one of them's going to be there, and yet you still see all-time highs in SPY, QQQ, the Dow. Like everything's still pushing all-time highs. Tech is right up there. Like I used to watch Tesla all the time. It fell off. Tesla's almost back up there. Nvidia, it's wild, man. Seeing the wide mix of everything. It's just like kind of like the perfect shit show. But it's interesting to think too there's a space right now where not everybody, a lot of people want to buy the broader market. They want to buy tech, and that's evident because it's pushing all-time highs consistently. And yet there's this other space over here where gold is pushing all-time highs, silver is pushing all-time highs, and those people who are chasing tech and the broader markets like haven't made that rotation yet. But as you know, lots of people in our industry are predicting that is going to happen.
And we'll probably see a lot of, I mean, Jay's projecting 30% of attendees to be new investors at this year's VRIC.
Hmm.
So it's probably we're going to see at the conference a lot of sentiment start to change, even from last year. Hell, I know since February when I've joined the market till now, sentiment has changed, attitudes have changed. You have seen
Hmm.
we have seen companies been funded, and yet we're being told, "Oh, that's not the end yet. We're just getting started." It's like, what do you mean we're just getting started?
Yeah,
Like,
it's
this
funny,
seems
right?
like absolute chaos right now. Everyone can just
Yeah.
be, everyone's writing checks, everyone's being able to
Hmm.
um, start drilling or whatever they're trying to do, get them permits for their mines. That doesn't have anything to do with capital, but it just seems like everything's really starting to move. Old mines that previously weren't feasible at current gold and silver prices are now, sorry, starting up again and starting production up. It's just it seems to be absolute chaos.
100%. It's really exciting to see. It's fun, and it is true because you've been in this industry longer than me. I mean, you're approaching a year, which is cool. I'm less than that, but even 4 months ago, 5 months ago, when I first had those phone calls in this industry, people were like, "Yeah, it seems like a good time. Things are changing." Like it was like the conversation 5 months ago, 4 months ago is different than the conversation I'm having now and hearing from like CEOs and established people in the industry. It's like it's already changed, but it's so early still. And you look at the miners being able to raise money and stuff, and that's great. But then you look at what's something interesting too. It's like even look back to 2021, after like COVID, gold went up, all the miners went crazy after it, right? Before they had a couple of years down in the shit. You look at most of these stocks that are doing great right now that are like four baggers this year, and they're sitting like 300% from 2021 prices. And when
Hmm.
you look at where they were, in February versus now versus 2021, like they hit that price this year. They're all like 10 baggers, 12 baggers, 15 baggers this year. And tons of stocks are. It's like you can very tangibly see even just in a few years, where it was and where it can still be. And the crazy part is the disconnect between the juniors and, I mean, you could even say the majors, the mid tiers, the producers, the developers. The price of the metal, how much higher it is now, both gold and silver specifically, versus 2021, and the price of the mining companies then versus now, namely the juniors that had that crazy run following price of gold and then come down. It's just you can see clearly like juniors have so much to go still, so much upside.
I agree. With my limited time in the market, in the at least the commodities and resource space, I would agree. And it's funny because, like we said on our call this morning and during the podcast, and even a couple of weeks ago, is we thought we're late, but we're still so early, and people can
Mhm.
recognize that as exactly, yeah, like a lot of mining companies are still down 300% from their all-time highs,
Yeah,
but we've got in
they're
so
up
early on a lot of
400%
them. And
this
we're
year.
like
Yeah.
5 years from now. Are you kidding me? What is it going to look like in 5 years? I think that's something to consider too
Yeah.
now is we're getting some great gains. Our portfolio is in the green, but it's not the end, and we just got to stay reserved, think logically about our investment decisions, and position well. And don't get too greedy too. I mean, only takes one. I don't know. It's a very interesting time, especially with, like you said, tech being in the bubble, S&P, Nasdaq hitting all-time highs and approaching all-time highs again, and now gold. It's like traditionally when one sector is up, the other's down.
Yeah.
And I don't know if that's because we're having a whole market re-rate for the commodity second sector, and then it's eventually going to affect the tech bubble because everyone's saying we're in a tech bubble now. I don't have enough knowledge to speak on that, but everything's
Yeah.
so inflated just from a quick
Yeah.
analysis. So it's
Yeah, exactly. You look at the Ford Ps and everything that they're trading at, they're pretty high for sure. Well, I would say now that we kind of covered where we're at, how we feel about gold and silver, we didn't dive into copper too much today, but I'm sure we will in the future. I mean, it's had a decent recovery. There's still some work to do with copper. Why don't we dive into our portfolios, I guess, or kind of work our way down the ladder from the metal to the miner. Anything you're super excited about this week, next year? What's going on?
biggest excitement, probably safest play too, is Empress Royalty. I think. I mean, we've both met Alexandra, great CEO, great company, doubling cash
Hmm.
flow every year. Um, I don't see any reason why they're not going to go to $2, $3 a stock. They're so strategic in how they're acquiring royalties as well. They take their time. One year they had no new acquisitions, but because nothing was right, they're changing their investing mandate a little bit, which is cool and
Hmm.
expanding. But Empress Royalty is such great exposure because they're gold and silver. I mean, their
Yeah.
margins and cash flow is going to be way more too as the prices of the metals go up. So they're
Yeah.
probably my favorite right now and safest
Hmm.
play.
Hmm.
Everything else is a little more speculative in nature.
No,
Dolly
fair
Varden,
enough.
I really like. So those are kind of Dolly
Those are
Varden
kind
is
of
yeah.
those are kind of like your top two. I don't have Dolly Varden. I wish I bought it when I was looking at it at $3. I do have Empress Royalty, and I just pulled them up as well just because I'm curious. 5 years in a row, increasing revenues significantly, which is just such an encouraging thing to see. I mean, we've got this advice twice now from two different people, pretty much base idea if you're going to go invest in a company that's making money. Obviously, investing in junior mining can be different because it's a lot more speculative. They're not making money yet, etc. But if you find a company that's making money and they make more money this year than last year, and you can date that back for however many years you can go back, right? That's super encouraging. Empress is a great example of that. 5 years in a row, they've made way more money every year, like significantly more. And yeah, this year obviously is going to be nothing different with the metal price. And yeah, I can't imagine that. I'm really excited to see. It looks like their year end is end of year, so we're still a couple months away. And then obviously they have like I think 90 days for the TSX or 120 days to report everything. But it'd be cool to see in the next 6 months what that looks like.
Well, and when you see even what they're trading at compared to, I mean, they have a market cap of 100 million, but they don't need to raise any more money, so they're not going to dilute shareholders. Yeah, strong cash position. And you look at the Franco Nevadas, the wheat and precious metals, obviously
Mhm.
those are major royalty companies, but when you see what they're trading at, I don't think there's any reason if Empress keeps doing what they're doing, making shareholders happy, that they couldn't be at $2, $5. Super speculative to say that because again, we don't know what's going to happen in the next two
Yeah,
years, 3 years.
yeah,
But if the trend is consistent, who knows? I'm going to keep dollar cost averaging them, and I'll just keep saying that. I mean, I've been buying
yeah.
them since 40. I'm going to continue buying them. I bought them last week at 97. I'll buy them at $2. Like they're just a play I believe in so much. So I'm not afraid to
Fair
say it.
enough. No, 100%. That's good. I love the conviction. I mean, it's a great company. Um, I'm just looking through my portfolio as well. Rua, man, I don't know if I spoke about Rue on any podcast in the past. I've tweeted about it a few times. I know that, and I shout it from the rooftops that I like the company and I like Robert as a CEO. And I did. I guess I did post a TikTok talking about Rua. So if any of you saw that, man, it's been a good couple of days for Rua. I think it's up. I bought it at. Looks like my average cost is 74 cents. It was like a buck nine today at close. It peaked at 121 yesterday. It was just like one of my first investments in mining and just a really high conviction play for me. And I'm glad that I held on as long as I did. Like I made money within the first, honestly, like the first 2 or 3 days, I was up like 30, 40% on Rua and I held it all the way back down to being in the negative for like a couple months bouncing in and out. And it finally had that big breakout above a buck. I feel like we're kind of in a new price range, I suppose, with Rua. I feel like we won't really see it much below a buck anymore, and that's kind of the new range. I'm really looking forward to seeing how that kind of pans out moving forward.
And let me ask you this, Tyler. You held Rua, went up 40%, then watched it go in the red, now at $1. What was the investment lesson through that time frame of holding it?
Well, you know what? That's a good question because with Rua, I when I bought Rua, one, it was one of my earliest investments in mining. Two, although I was still learning mining, junior mining, I did as much research as I felt comfortable. Like sometimes, and we're all guilty of it, right? Like we just buy a stock. Like I bet half the people out there who buy Nvidia like hardly know anything about Nvidia. Like they're an AI company, right? And I think that's common in all areas of investing. People just buy stock because they think they're good, because it looks good, because they want to make money. And even in this space, I've succumbed to that, unfortunately. But with Rua, I did my research. I looked into their projects, where they're operating, what their plan is. I even had a phone call with their CEO 4 months ago, and I just felt really good about the investment decision based on my research. And I'm proud of myself for taking the time to do that research, even though I've learned a lot about investing in mining. Now I probably would have done more research or different research or come to just a better understanding of the project. But I guess for me, after doing that research, seeing it go up, I had a plan, like a long-term plan, I guess, where like 30% up. Sure, in hindsight, I could have sold, bought back again at 61 cents. It bounced between 60 and 75 cents for the last 2 months. But that wasn't my plan. Like this was like a longer term, let's see them out. I want to see how their drilling goes. Drilling has gone good. Drilling's continuing to go good. They're cashed up now. It was kind of like a longer term plan. So I didn't get too excited about the short term gains. And I just felt comfortable holding them all this time. They were and still are my biggest junior mining holding, actually, to be fair. Um, so yeah, I don't know if that kind of answered your question. I kind of just ran through the play in my head.
No, but I mean, the proof is in the pudding that for one, viewers who are listening and us too, is if you have conviction in something, even if it runs up 40%, if you believe in the value they're going to be creating long
Mhm.
term, hold it. We have seen that with Kirkland Lake. It ran up 700, 800%, but we still believe in what it's going to do in the next 2 to 3 years here that we're holding it, even though we're up a crazy amount, like percentage
Yeah,
wise on the
percentage wise,
company.
yeah. Yeah,
I
exactly.
mean,
Yeah, no, that's a good point for sure. I mean, we scaled some out, which is important to do. I haven't done that with Rua since it's had its big run up, but yeah, with KLDC, take a little profit. I mean, anytime you go up 800%, you should take some profit. But that's the thing. You have like, should always enter a trade, and I've like failed to do this like too many times to count, where I've entered a trade without a plan and exited it because I lost money or I got scared or because I made 15%. And it's just like, for good or bad, it's just not a good idea to go in without a clear plan. And Braden Sutton, time and time again, reminds me anytime I talk to him on the phone, text, whatever it is. He just like, you got to have a good plan. He says it in his book, like you've got to go into a trade with a plan. And yeah, Rule is a good example of me having a plan. Like KLBC, like it was a plan. It seemed like a good investment. We made it. We made profit. We scaled somehow. We're holding it. We're waiting for more information. And it's just a really good kind of lesson that you just need to really just pound into your head. Like, don't trade without a plan. Buy a stock. You've done your research. You believe in it. Even if your plan is to sell after you make 10%, at least you have a plan. You do not hold till 15 and then don't sell because you're like, yes, it's going to go to a million. And then you're down 30% because that's happened to me countless times as well. You need to have a plan when you enter a trade.
I 100% agree. There should almost be a feature on Questrade or something where before you buy a stock, you have to write a paragraph on why you are buying the stock. Just because you know how many people that would stop. I mean, liquidity would probably be lacking at that point because
Yeah.
some people are like, I don't know, it's an AI company.
Yeah.
But for the intelligent investor, yeah, you want to know the why. And if you believe in it that much, it doesn't matter if it goes down 30%. If you understand the value they're going to create in the future, and you believe in that value, and you also believe they're undervalued from what you bought them at, because again, Jay said this the best is when you're buying a stock and someone's selling, you're having a debate. You believe it's undervalued, they believe it's overvalued. And
Yeah.
so you need to believe in your thesis why it's undervalued. And I don't know, it's just a lot of people don't do that. I mean, buying the video right now, personally say that's overvalued. People
Yeah.
who are
But
selling, but
depends, I guess, how you look at it too. You could look at Nvidia and say it's overvalued, but in 3 years, these prices will probably be undervalued because it's such a good company. Again, comes down to your plan, right? If you have that long-term vision with Nvidia, you should drop 1% of what you want to own in them today and 1% next week. And, when the stock market inevitably crashes in the next however long it takes, based on what your thesis is, I don't know anymore, honestly. I'm kind of like, I had my thoughts. I need to get new thoughts on when I think that's going to happen. But if that's part of your plan, buy it now, buy it tomorrow, buy it when it's back down to $100, buy it when it's at 150. It shouldn't matter. That's kind of like a big learning lesson, I guess, for me this year. It's like, have a serious plan when you're trading or investing. And again, shout out to Braden. He's reminded me of that enough times now. I think it's maybe sticking to me, combined with my own painful personal lessons of going in without a plan. Now it's like, have a plan. Even my most recent purchase, like Blue Lagoon Resources, I sent it to you. I have a 4-page report that I made, like, ChatGPT made it for me, but I spent like 4 hours researching the company and prompting it to write me this report. It's like, I have a plan with why I bought that stock. I have a reason behind why I bought that stock, and I have a plan with exiting it. I have price targets as well. And it's like just so important to have a plan like that. And your plans can change, but they would change with more information.
And I think it's something I'm so proud of us too is how we've evolved even in the last year of knowing each other,
Yeah.
2 years as investors. Is this is harder capital. If whether it's $1,000 or $100, we have worked hard for this money. Why are we going to throw it into something and risk losing everything or half of whatever it is without doing research, right? It's like you, depending on how much you made and make an hour, it's that could be a full paycheck, $2,000, or that
Mm.
could be a week's worth, whatever. But then to throw that into the market, into a company you don't know anything about really, and just hope it goes up, I mean,
Yeah,
it's gambling. And
it
then you're
is.
just starting the cycle over again, working hard, hating your job, throwing money in something you don't believe.
I
It's
mean, kind of
Braden
what we
Sutton's
did.
book. Yeah, his
I'd
book,
recommend
Money
the book to
Minded, is
anybody.
definitely,
Yeah.
yeah, that is definitely what helped reshape my mindset in that factor, and also thinking of cash as an asset because if there's nothing you don't like right now,
Yeah.
you have cash available to deploy in something you like. Those are two things Brandon's book has really helped with my
I've gotten
mindset as an
those words
investor.
on text like 7 times. And it's
Yeah,
good. It's good advice. It's true. Cash is an asset. Like I mean, I guess you can call it a depreciating asset because the value of the dollar is going down. But at the end of the day, the optionality behind holding cash is valuable. And I wish I had more cash right now because I'd be buying more of my metals and mining.
and there's not enough cash. The amount of companies that I've started small positions into, but want to just dollar cost average into to grow
Mm,
them because of the belief. I think that's also funny too, is when I first got into investing all these years ago, because I'm super old, you know, um, is that I thought I had to own 20 companies to be successful. But really, especially for the resource sector, you find 10 good ones, 20 good ones at like the most, you're fine.
mm.
You don't need to have, and it's better to have $1,000 in 20 companies than $100 in 200 companies. I mean, your risk is more spread out, I guess, and you're more
Depends who you
diversified, but it's
ask.
also, yeah, it really
I,
depends on who you ask.
I,
Even in the space, every investor is different. Personally, I wouldn't go more than 10 to 15 because I can't pay attention to more than 15 companies. Look at all their news release and their stories and what they're doing. And if I wanted to give the CEO a call, 200 would be crazy. I don't know how Eric's brought this 200 companies.
or Don Durrett. Don Durrett as
Or
well
Don
has
Durrell.
like I think he has like 180 or something. I screenshotted his portfolio tonight because he posted it. I know we already talked about that. I'll count it up
Mhm.
later. I'm going to put it all in Excel actually. And yeah, that's too much. I mean, you look at him. I don't. I think he does it on his own. I get the impression he's not like a team guy, company guy. Like he's just it's Don. He likes stocks and rocks, and he spends 10 hours a day every day of the week looking at them, and he can maybe manage that. And he knows a lot. He goes to the events. Like good for him. But for us, like we have full-time jobs. We're doing social media. We have business plans, and we work hard in our jobs. We don't have time to manage, 180 positions. I don't have time. I hardly would have time to manage 20 positions, and I don't have 20 positions because I can't manage that. And I mean, going back to Braden again, I'm going to have to send him some of these clips, but he said as well, more advice from him is if you can't spend at least an hour a week being up to date on a company, you shouldn't own it because you're not going to know what's going on.
Yep. Another great point from Braden. Like right now, I think I have 10 positions, which is 10 hours a week. And that is, I'm maxed out capacity wise. It's hard to get an hour of each. But
Yeah,
yeah.
between our jobs and social media that we're trying to scale, it's
Oh
like
man,
12 hours
the
a
whole
day
grind.
minimum. And probably can say at least, 6, 7 hours every day on the weekend as well. It's like
Mhm.
70 to 80 hours a week of work outside of investing.
I agree. Because then, yeah, it's on the weekends, it's looking at what's happening in geopolitics, supply and demand of the commodities, what companies I'm interested in or want to start evaluating in. Then we have to plan our scripts and content for the next
Yeah.
week, prep for the work week, then we start again. And then, I mean, you and I, we work out during the day. We try to look at market open and what's happening to these companies. Then we work 13 hours a day. Then we shoot content and then we rinse and repeat. We need more
8:36
hours in the
p.m.
day.
right now. 8:36 p.m. Wednesday night. We're finishing this podcast right now. Gonna probably edit it for the next like hour and a half, and then probably do like an hour of research on stocks, and then go to bed at like 11:30, and then get up at
And you
like
know what?
6.
You know what? I wouldn't change a thing. I love my life.
There.
I love every
Yeah,
second of it. So,
me too.
not
Me
for
too, man.
everyone,
No,
but
exactly. Some people are happy. It's like, I mean, Gary Vee says it. He's like, I know some people who make $100 million and they're miserable. I know people who make 50K a year are happy as shit. And,
mhm.
but yeah, we're just kind of different, and that's fine. We just love the grind. I absolutely love it. Wouldn't have it any other day. So happy and thankful in this new job, doing the podcast, hearing great feedback. Anybody listening, shoot us a message, give us some feedback on the pod. Tell us you like it, you hate it, you love it. Doesn't matter. Like, we love hearing it all. We want to make it better. And the good feedback we get occasionally, usually through the grapevine, because people don't want to say it to our faces. It's good to hear.
Yeah, but it's super motivating in that sense too. I mean, we've had a couple great messages about what we're doing. Obviously, it keeps the motivation alive. I mean, we weren't
Yeah,
super consistent the last, I guess you can call it week and a half, but I mean,
yeah,
I was moving, so and you were helping
yeah.
me move, so that it was kind of difficult.
It's
But now we're
yeah, it's been
back,
a
baby, and we're not stopping.
yeah, yeah. Colton's in his new apartment in North Vancouver. I won't say the address just because I don't want the ops to pull up. But
123 Nickel Street.
he's in the big city now. Yeah, it was hectic. The last couple of weeks felt really busy. Here in our jobs, still this week's been crazy. You've been moving. I've been blowing up on Instagram, so life's good. But we'll save that for another day. I think we're at 30 minutes now. We usually try to keep it to 30. I'm happy with what we covered today. I feel like it was a good
Yeah.
conversation. Let's close it out, man. Thanks for watching, guys. I appreciate you tuning in for another episode. Stay tuned.